Yeah, it's a special CNBC Africa program focusing on the budget that has just been presented by the Finance Minister, Enoch Godongwana. The numbers are in, the applause has been done, and the politicians are busy now caucusing, and let's see if they are going to be able to vote for that budget. But let's try to understand what this budget has done, at least those new elements that have been brought in. My panel of experts, let me introduce them. Zandile Makhoba, Economist and Lead Specialist, Research Insights at Liberty. Thank you for joining us, Zandile. Trevor Gavin, Head of Multi-Management at Nedgroup Investments. Thank you, sir. And David Warneke, Tax Partner at BDO South Africa. Thank you, David, for joining us. Let me start with you. Ahead of this budget, all of us were saying he's going to have to increase the sin taxes. He's going to have to look at some form of increased taxation in terms of trying to find that 75 billion rand that he required over the next 3 years. The numbers are in. Your judgment.
Godfrey, yeah, I don't think in an ideal world this is the budget that South Africa really would have wanted, because in a low growth environment, one doesn't want to have to take tax, extract tax, which is exactly what's happened, because you've got the fuel levy that's going up, albeit by inflation. It hasn't gone up for 3 years. Still got a very similar effect to VAT. So that's going up. And then we've got no bracket creep adjustments again for the second year in a row. And our personal income tax burden in South Africa is one of the highest in the world. That was noted in the 2021 budget already. It's about 10% of GDP, and it's a bit worse now after this. So I am concerned about that. I also don't know how credible it is that SARS is going to be able to come up with the 20 billion to plug the hole. That remains very much to be seen. I do have concerns. On the other hand, given the position that the minister finds himself in, I don't know that, what else he could really have done. I think that the reality is that comprehensive spending reviews should have been done years ago. I certainly hope that the ones that they're going to implement now with this committee are going to go far enough and look at things like procurement policies, number of government agencies and the like. I hope it goes that far. No guarantee that it will. But that's really what's required, because we shouldn't be spending so much. We shouldn't have to spend so much that we have to raise taxes to plug these gaps. There's still a lot of inefficiency in our spending. So I sort of give it a mixed rating overall.
A mixed rating, you're saying. So, but I wanted just to clarify what you said around the VAT rate. Did I hear you correctly to say it's been maintained, i.e. no increase, or he's maintained the increase that he had proposed at the beginning? And then secondly, I just wanted a little more explanation on the tax burden that you alluded to.
Okay, so VAT isn't going up. It's still going to be 15%. At the same time, the expanded basket of zero-rated goods that was going to come into effect with the increased VAT rate has been withdrawn. So that won't come into effect either. As I say, the fuel levy has gone up by inflation for the first time in 3 years. And the tax burden I'm alluding to is the personal income tax burden, which, as I say, is the highest amongst middle income countries in the world. And it's going to get worse. And what concerns me a little bit is that, well, firstly, we shouldn't have to increase taxes or raise more taxes, certainly not in the sort of environment that we're in now. But I think we've got into such a political muddle around VAT that even if it comes to, in the following few years, that it would be the best way to go to raise VAT, I don't know that there's going to be the sort of political will to go into that fight again. So then it might be that the only realistic way of raising further taxes is going to be like an inflationary measure like fuel levies, which is what's been resorted to this year.
Yes, burden.
And once again, the personal income tax burden, because the corporate income tax rate can't be increased.
Absolutely, absolutely. David, thank you for those insights. So a mixed rating from your side. Zandile, let me come to you. Your insights in terms of the overall budget, because obviously you look at it from a macroeconomic perspective, and whether there were any surprises for you. For me, top of mind is, of course, the widening budget deficit as well as the widening debt peak levels that the minister is suggesting here.
I think we can be happy that we finally have some kind of consensus within our GNU in terms of just agreeing on the budget. So I think that's a big win in terms of just starting to rebuild that confidence in what the GNU can achieve. And overall, aside from some edits in terms of where revenue might come from, there is an overall review in terms of the expenditure. So you see in all the major categories, 2 billion, 3 billion rand decline in expenditure here and there. And just in the initial glossing of the numbers, you can see that a lot of consideration has gone into what gets cut. Particularly if you looked at the grant administration. So all the grants still are expected to go up, but it's the administration costs around those grants where we are looking at cutting expenditure. So I think that there's something very meaningful around how the expenditure has been reconsidered and where those cuts are coming from, being very considerate to the consumer at the end of the day, while trying to start implementing this idea of austerity and really managing the expenditure and being very accountable around how expenditure moves. And then the last factor, which I really thought was quite interesting, is we see this marginal increase in the expected corporate income tax compared to the first budget, even with the expectation of slower economic growth. So quite an interesting change there, but possibly, the effects of Vulindlela taking its course and really some opportunities opening up with the infrastructure conversation. Within the categories, it is the economic development pillar that has no change in terms of expenditure. Everything else has seen a decline, and only one category seeing an increase, which is our general public services. So really a lot going into where the money will go.
Yeah.
And that warning that we will see tax increases in 2026.
Yeah, I wanted you to expand actually a little bit on that hinted increase in the corporate tax rate. Where does that kick in? And then secondly, my other question was around the credibility of the cuts. And in terms of speaking of that credibility, I'm really asking the question whether you think the minister will be able to carry through what he is promising in this budget, or there's every likelihood of further slippage down the road.
So the corporate tax rate has not increased itself, but the estimate in terms of collection is what has increased. In March, there was an expectation of 331 billion. That now increases to 338. So not a huge increase, but definitely maybe a view that they, with improved compliance, we can start to see better collections on the corporate side, even within a weak economy. It speaks to maybe the benefits that might come out of supporting SARS and ensuring that they have what they need to increase efficiencies there.
Yeah. Got you. All right. What about the credibility of the numbers? You did allude to the fact that you thought there was careful thought that was placed in terms of where the cuts are being announced. But how likely do you think the minister will be able to carry through those numbers politically?
I think because we are in a GNU, it is the first time that we experience this kind of shared governance. There is more pressure to get it right. I think party players will be looking at each other to ensure that, at the end of this fiscal year, they've got a good news story to tell, not only for the greater good of the country, but for political gains as well. I think parties just have that incentive to get things right so that they can count their accolades. And maybe that is what motivates them to finally get things right.
Yeah, campaigning is underway for the 2026 local government elections. There's no doubt about it. I see the Democratic Alliance, the second largest party in the government of national unity, issuing a statement saying it cautiously, that's all in brackets, cautiously supports the new budget. Let me put directly, the Democratic Alliance cautiously welcomes the revenue and expenditure proposals in the Minister of Finance budget speech. We see it as a pathway to a national budget, which we should be able to support when it comes to time to vote, hence the stability. All right, let's bring in Trevor Gavin, the head of multi-management at Nedgroup. Trevor, from a market's perspective, I wanted your take in terms of what this budget contained as a whole.
Yes, good afternoon, Godfrey and everybody. Thanks for having me. So it's been interesting. I've been watching the markets over the course of the budget by the Minister of Finance, and really there's been very little change from when he started his budget presentation till we're speaking now. As you can see, I mean, the Rand has actually did most of its movements and work before the budget speech. So I guess in anticipation of what was going to be said. And we've seen over the last week or so, but specifically the last 2 or 3 days, the Rand's strengthened from about 18.20 to the dollar, and it was sitting at 17.88, 89 when he started the budget speech. And as your screen showed a bit earlier, it's actually hardly moved since he's spoken. So I guess that could be read that the markets were expecting roughly what he presented today. There were no real surprises. Equally, that overall the market is positive on the fact that the GNU has got to a consensus that they've passed the budget today, hopefully, and the fiscal framework. And so those are all seen as positives. I think for me, the key thing that stands out is the GDP growth. So the numbers have been dropped, as the minister mentioned, from 1.9% to 1.4% for 2025, and then increasing to 1.6 and 1.7, I think it was, or 1.8 for 2027. Now, for me, that's one of the most concerning things, is that is just not high enough economic growth for the country to really get on top of its debt issues, and equally in terms of just general economic growth and hitting our unemployment, which, as we know, hit a new all-time high of about 33%, came out about a week ago. So that would be my sort of main concern. And I recognize, I think some of it is affected by global economics. And we know that over the last couple of months, the world's been readjusting to President Trump and his tariffs and ongoing Make America Great Again policies. So that has affected the outlook for global economic growth. And as the minister said today, he's caused a reduction in South Africa's growth.
Yeah. So when you look at those numbers, if you can, I just wanted to perhaps talk a little bit about that growth. Number one, the government's forecast is not as drastic as we have seen from the other banks. Is that number two optimistic in your view, or is the minister right in pegging where he is, slightly below the International Monetary Fund forecast, I think, of 1.5%?
Yes. I think he is probably erring on the conservative side. Again, I mean, history has taught us that generally the country, South Africa, has often struggled to meet those GDP forecasts that the minister has used within their budget and the projections, because, of course, we know it has certain ramifications. It affects, first of all, the budgeting process, and then also the actual GDP ratio. And as we saw, the debt to GDP, as he mentioned, is now going to go up from 76.2% to 77.4%, I think it was, of GDP to debt ratio. And 77% is really the spoken about number that is really not ideal for economies, and certainly economies like South Africa, to hit those sort of levels of debt to GDP. So we really are on that cusp where markets can turn negative upon a country once that ratio gets too high. In terms of the forecast, again, whether it's 1.4, 1.5, or even 1.6, it's really not great economic growth. I mean, the world is growing faster than that. And if you think back to the era, actually, 10 years ago, plus actually, of the Mbeki presidency, the South African GDP was growing at about 3.5% per annum. And that was when we really made material economic inroads into the growth of economy. Employment was all the way down to about 18-19% at that stage. And that's really where we should be aiming for.
I totally agree with you. I remember 5% at one point touched as well during that time. And yet, even at that time, we missed the major boom in metal prices because then we introduced other policies that sort of rocked the boat, as it were. But let me come to you, David, because you, in your initial comments, suggested doubt in terms of SARS being able to raise the 20 to 50 billion rand. The minister said SARS could raise because it's now been funded better, AI and all of that, and of course the increased compliance and let's call it collections. Just speak a little bit about your doubt in terms of SARS' ability to be able to do this and what that potentially could do to the overall macro numbers, because if that money is not coming in, the debt to GDP ratios that Trevor is talking about are likely to go higher.
Yeah, and I think that's right. I mean, SARS already makes quite good use of AI and big data, and they are generally quite efficient. As I understand what the minister was saying, that this money is going to be allocated for, it's largely to collections of outstanding tax debt, stemming illicit flows, particularly with regard to tobacco, and also modernization, the general modernization of SARS. And SARS, unlike regular companies that are subject to international financial reporting standards, don't report their numbers on an accruals basis. They basically report them on a cash basis. So they take in the money that's come in during the fiscal year in terms of it's taken in as government revenue, essentially. And so what we used to see, it's not happening so much anymore, thankfully, was that there'd be a lot of sort of seemingly spurious assessments that would get raised or attempts to get money out of taxpayers that wasn't necessarily what they'd end up having to pay in terms of getting them to revise their provisional tax estimates and questioning all their estimates and so on, in order to get the money in, and then it would just have to be refunded later. So that's sort of smoke and mirrors. So certainly one hopes that that isn't going to happen. But I do think that that there is going to probably be a more aggressive stance taken by SARS, because they're going to be under a lot of pressure now to raise revenue to meet these targets. And I just hope that that doesn't create problems for taxpayers, trying to comply with their obligations and under the various tax acts. So I certainly hope that that doesn't happen. I mean, I'm not saying that SARS won't collect that amount of money. It's just an unknown quantum. It's very difficult to quantify what exactly additional revenue would be generated by putting in the 7.5 billion that the minister is going to put in over the medium term. So, to sort of pin your budget on that is, that's why I say it's, to me, just sort of undermines a little bit the credibility of the numbers.
Yeah, my simple mathematics would suggest a return of 3 times if the minister is able to get SARS to collect more than 20 billion rand from investing the 7.5 billion rand in SARS. And if he gets to 50 billion rand, well, that's 7 times the return. Well, let's see if the minister is able to achieve that. If I can come to you, Zandile, and we're rounding up here, and I wanted your thoughts. The minister says the government spending is shifting from consumption to investors. And then the second line to that, he said the fastest growing expenditure item is investment. Does that give you the hope that we might be turning the corner here and we could see growth, maybe not spiking, but perhaps picking up the momentum that we require to get to higher growth rates?
The budget seems to really hang on this idea that we will achieve this inclusive growth through investment. And this hangs just not only on the infrastructure budget, but the idea that Operation Vulindlela will create the right atmosphere for us to move in that direction. For Operation Vulindlela, I think we've got some credible milestones that have been reached, some good progress that I think can be believed. And the idea of moving into this phase 2 is encouraging, I think, from an economic perspective. What is also building a lot of credibility about Operation Vulindlela is the partnership with the private sector, a stakeholder in South Africa Inc. in terms of its growth potential, but also institutions which are more likely to produce results, unlike what we sometimes see in government. I think that should have a meaningful contribution, and it will filter into what happens in terms of infrastructure. I think we've all lamented this idea that there is always an infrastructure budget and plans to see infrastructure move in South Africa and create a much more economically effective environment. I think we are in that special position now where there is a lot to lose if we don't move ahead. But also now the accountability is much stronger with the GNU and Operation Vulindlela being part of this fiscal plan. And we wait and see, maybe with a little bit more optimism than we might have been in the past.
Absolutely. I'm reading cautious optimism as well in your voice. Thank you for those insights. If I can come to you, Trevor, last, just your thoughts in respect to that very question that I put to Zandile.
Yes, Godfrey, 2 quick comments, and I'll touch on that. Is I think, first of all, which will be interesting to watch, is given the gold price surge over the last 3 months or so, I think SARS might benefit from a little bit of an extra windfall in tax revenue coming out of the gold mining companies, who will probably make short-term abnormal profits out of this higher gold price. So that's perhaps a little silver lining on the horizon. And then my other comment just would be on the cost of debt. And that's, I think, something that the government really needs to focus on. I mean, we know that currently the South African bond, which is really the measure of risk and the way the markets measure the risk and the stability of the country, is trading at around about 10.7%. And those costs and yields have gone up in line with global yields as the markets have priced in higher inflation potentially due to Trump's tariffs. But what we need to try and do is get fiscal stability in the country, which in that process will reduce the cost of debt from South Africa's credit rating perspective. If we can get credit upgrades, and we're currently in junk status as a country, and we can get back to investment grade, that will reduce the cost of debt to the country, and that will go a long way to South Africa being able to get that debt burden down and afford to pay for it.
Absolutely. And in your view, in the budget that has just been presented, we haven't worsened the risk of us getting downgraded, rather than we should be able to maintain the return to perhaps an upgrade, if not in outlooks, to the actual rating itself.
Yes, I definitely don't think that the market is looking negatively on the budget presented today. And again, the key is going to be now whether SARS and the government can deliver on these budgets, I guess, which is showing not a consolidation of our total debt. And over time, as that debt to GDP ratio improves, and specifically if we can get economic growth up, the ratings agencies will look to potentially upgrade us. And they've made noises about that they're looking at that. And I guess they will be watching the space closely as well.
100%. All eyes on SARS. Deliver, Mr. SARS, sir. We all waiting. Zandile Makhoba, Economist, Lead Specialist and Research Insights. Thank you. At Liberty. Trevor Gavin, Head of Multi-Management at Nedgroup Investment. Thank you, sir. And David Warneke, Tax Partner at BDO South Africa. Thank you all for your insights, for your participation. Before I go, let's take a quick look at those markets that we're talking about that are likely to be a key focus, if you like, over the next few weeks as well as markets digest this budget. And I can tell you that we've been able to maintain the gains that we had at the beginning of the program, and the rand hasn't gone anywhere against the US dollar. Quickly, your quick look across the JSE, as you can see, all those major indices solidly in the green, anchored, of course, by those gold producers in the resources tab. Checking at the rand, as I said earlier, it hasn't gone anywhere. A little change on the day, as you can clearly see on your screen. So the markets, at least today, at least for now, likes the budget. We're going to go to West Africa next for closing bell, West Africa. Thereafter, closing bell, East Africa. Closing bell, Southern Africa, 4:30 p.m. Central African time. Nastasha Arends will be here.